Hello and welcome to Earnings Echo. We put together the most important information about Coupang. We have the Q4 2025 numbers in front of us, and the data points to a deep dive defined by some pretty significant operational friction. Let's get right into the quick check.
Well, reported revenue came in at $8.84 billion. While that represents an 11% year-over-year increase, or 14% on an FX-neutral basis, it is a miss against the analyst consensus, which targeted the 9.14 to 9.26 billion range.
The bottom line shows an even sharper deviation. The street was positioned for a profit between 2 and 4 cents per share.
Correct, and the actuals came in at a loss of negative 1 cent per share. Furthermore, forward guidance for Q1 2026 projects revenue growth decelerating to just 5 to 10% on an FX-neutral basis.
A top and bottom line miss paired with soft guidance usually triggers a massive sell-off. How did the equity react in after-hours trading?
The reaction was surprisingly muted. We saw a decline of only 0.5% to 1%.
Which implies the market had largely priced in the negative catalysts following earlier disclosures about those security issues.
Exactly.
Let's isolate the operational drivers for that swing. Going from a $156 million profit last year to a net loss of $26 million this quarter.
The primary drag was the data incident. Management confirmed a breach in Q4 involving 33 million user accounts.
This occurred in December.
Right, critically impacting consumer behavior during the peak season, which directly hit revenue growth and profitability.
Looking at the product commerce segment, the core business usually offsets expansion costs. Did the margins hold up there?
Margins contracted. Product commerce revenue grew 8% year-over-year to $7.4 billion, but the gross profit margin for the segment fell 83 basis points to 31.9%.
Let's pivot to the developing offering segment, mostly Taiwan and Eats. We are seeing a divergence between growth and cost.
Precisely. Revenue in that segment rose 32%, driven heavily by triple-digit growth in Taiwan. However, the cost of that expansion is substantial.
The adjusted EBITDA loss for developing offerings widened to $300 million for the quarter,
up from a $118 million loss in the prior year period.
They are accelerating the cash burn to capture market share. How did this impact free cash flow?
Free cash flow dropped nearly 50% year-over-year to $527 million. This decrease is directly attributed to the data incident's impact on working capital, combined with increased capital expenditures.
Moving to sentiment and the earnings call, how did management address the deceleration?
The tone was cautious, but very committed to the long-term strategy. They transparently noted that the data breach fallout will continue to impact Q1 2026 results.
Though they observed stabilization beginning in February.
Yes, and Farfetch provided a positive outlier. For the first time since acquisition, it generated positive year-over-year revenue growth and positive unit economics.
Despite that, the forecast for developing areas suggests continued heavy investment.
Management forecasts that developing offerings will incur a full-year EBITDA loss of $950 million to $1 billion in 2026.
With a $1 billion projected loss in developing segments and a slowing core, liquidity really becomes the focus for you as an investor.
The balance sheet remains robust, with over $6 billion in cash. Liquidity is not the immediate risk. The concern centers on capital efficiency and the pace of margin recovery.
Summarize the investment story. What is the echo for investors taking this deep dive today?
Coupang is in a transition penalty phase. The core commerce engine has slowed due to the security breach, while aggressive expansion in Taiwan is compressing margins.
Investors must weigh that $6 billion cash cushion against a slower recovery curve.
The critical metric to watch is whether the 5 to 10% growth guidance represents the trough, or if trust issues extend the duration of the slowdown.
We will track the Q1 recovery data to validate that floor. And finally, the obligatory disclaimer. All content in Earnings Echo is AI-generated information and does not constitute investment advice. Investing involves risks. We assume no liability for your investment decisions. Do your own research before taking action. Numbers checked, portfolio prepped. Catch you again soon.